Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the markets today? Well, not a lot. Dow's down about 50. Nasdaq's up about 50. Kind of flat. Still a couple hours left. Maybe we get some fireworks a little bit later on. This market's looking for direction. The S&P pretty much trading between 4,200 and 4,000. 4,000 being on the low, 4,200 being on the high. We're kind of in the middle, right around the 4,100. Which direction will it break out? Well, the bulls are thinking that it's going to break out higher, going to break above 4,200. And of course, the bears, they're rooting for it to go down below the 4,000. If it breaks either direction, we could have a big move in whichever direction it breaks. But now I think it's going to break lower. Now, can I tell you why? The reason I think it's going to break lower is that a bear market that we've clearly been in, we were in this bear market, right? Now, a lot of people think this is a new bull market. I disagree. I still think we're in a bear market. I think this is a bear market rally. Bear markets do not end before the recession begins. Now, a lot of people say we're not in a recession yet. I think we are, but let's say we're not. Let's say the recession hasn't begun yet. There's going to be a recession. The inverted yield curve is pointing to the direction of recession, which means the bear market's not over. So I think we're still coming down to the downside. Now, that's just my take on the market. I know a lot of you think the new bull market's intact. Hurry up, get in, we're going higher. And I'm not saying that's completely impossible. I'm not ruling that out. I'll give it a 10, maybe 20% chance. But I think there's an 80% chance that we go lower. Once again, just my take. So let's get over to the real estate market. Now, what's going on in the real estate market? Well, we were all excited because interest rates on the mortgages came down from 7% down to 6%, right? Well, not so fast. We're now back at 6.6% for the 30-year, and we're headed up towards 7%. Now, it's my personal opinion that we're going to go higher than 7%. It's my personal opinion that inflation is not done yet, and the Fed's going to keep raising rates. They're going to get above 5%. They're going to raise them to 6%, which is going to push the mortgages up past 7% to 8%. Now, think about that. That's for if you have a good credit score. You got that good credit score, you might be able to find that 8% mortgage. If you don't, it might be closer to 9 or 10%. But pretty soon there's going to be no way out, to no way to sell your property. The sellers right now are pretty nonchalant. They go, well, if it doesn't sell, I'll just take it off the market and wait for the prices to go up back to where Billy Bob got. But there pretty soon, it's not going to be that simple. There's going to be no way out because the unaffordability. They're not going to be able to afford the houses when rates get to 8 or 10% on mortgages. So sellers, they won't have a way to get out. There won't be any exit for them. They'll just chase the market lower and lower until it gets the 30, 40, 50% off, and they'll have to jump down to those levels if they want to sell. Now, I read this interesting article directed to real estate agents. So a lot of you probably didn't see this article, but anyways, what they're saying is the headline was millennials that are living at home are ready to branch out and buy a property. Well, that may be true. They're ready. Can they afford it is the question. Now, I don't think they can. Now, out of the age group 18 to 29, 50% of people 18 to 29 are still living at home with their parents. Now, here's something also interesting. 1 out of every 4 millennial age 26 to 41 has moved back in with their parents. So 1 out of every 4 has moved back home. Now, they're saying in this article that to realtors that we're supposed to be marketing to the millennials that are living at home because they're ready to branch out on their own and buy their first home. Well, I don't think that's going to happen because, again, the affordability crisis. Now, the first-time home buyer, okay, it's at a record low. 26% of homes being sold right now are being sold to first-time home buyers. That's historically low, right? Normally it's about 40% are first-time home buyers. They buy the home from the person, then they go and they jump to the bigger home. But that's not happening right now. Now, the age of the first-time home buyer, the age has increased to a record high. 36 years of age is where the average first-time home buyer goes in. So a lot of you millennials that are living at home, I'm not putting any judgment on you. You can't afford the mortgage. You can't afford the rent. But the millennials have been dubbed the roommate generation, right? They have to have roommates. Now, in my 20s, when I was in my 20s, I had lots of roommates. That was the happiest time in my life, probably, was living with my friends. We were all roommates. We'd go rent a 4-bedroom house, and we'd each take a bedroom. And, it was cheap back then. And we could get a bedroom for easily under $500. Now, in many areas, it's about $1,500 just to rent a room in a house. But here's what I did when I was young, when I was in that generation, the young crowd, right? So in my 20s, what I thought is I added up how much rent I could get from each roommate. Well, let's say it was about $500. And I said, all right, 4 bedrooms, that's $2,000. I went and I looked for a property. I went and looked for a house, and I bought the house. I borrowed the money for the down payment, bought the house, but then I moved all my friends in, right? And I even converted the garage. So I had 3 living inside with me. I was the 4th. We each had our own bedroom. And then I had 1 living in the garage. So there were 5 people living there. 4 of them were paying rent. Who were they paying? They were paying me. And it worked out really well, right? I was pretty much living for free in the house. It did go up in value. Went up almost $100,000, that house. I bought it right around $170, and it went up to $270. This is a long time ago, but I'm just saying that you got to look for a way to get into a property. When you're doing that, that's kind of what's known as house hacking. Maybe you buy a duplex. Now, speaking of duplexes, my first property I ever bought, my very first one, I didn't live in it. I couldn't afford to live in it, okay? Anyways, I bought this old Victorian house, right? 1 story, old Victorian, very large lot. Matter of fact, it was zoned R2. Zoned R2 means it was zoned to be a duplex. And I sat there and I looked at it and I go, wow, this is really cool. I could make this into a duplex just by building a wall in the hallway. I turned the laundry room into the kitchen for the back unit, and then we had the front unit, and we had 2 units. We had a duplex, right? It was a non-conforming duplex. Now, I didn't have money. I had 0 money to buy this place, but I had a business acquaintance, and I went and approached him. I knew he had a lot of money. I said, hey, if you'll loan me my half of the down payment, I'll let you in on the deal. So he put up all the down payment. Now, I was paying him a little bit of interest for my half of the down payment, but we did exactly what I said. It was an old Victorian rundown in the bad part of town, not the good part of town. The good part of town, things were real expensive. This was over in the bad part of town. We built this we put a wall up in the hallway, and we turned that laundry room into a kitchen, and now we had 2 units, and we rented them out. It was a non-conforming duplex. By definition, it would be called illegal. It wasn't up to business codes or the building codes, but that was okay for us. We were young. I didn't have anything to lose. I had no money. Come and sue me. But anyways, it worked out. We rented it out for about 6 months before we flipped the property. We painted it, put in new carpets, built that little kitchen in the laundry room, and then we called it a duplex because it was zoned as a duplex. And then I ended up flipping that property. But I did that with 0 money, 0 of my own money. And I walked away from that deal with over $40,000, my half of the profit. And that was where I got my start. That's where I got my start in real estate. So partners is a way to get your start. Buying a property that you don't live in. I couldn't afford a property to live in at the time. I was just a broke kid. I was 21, 22 years old. I was broke. I didn't have money. But that was one of the first properties I flipped it. We rented it out for 6 months, and we were positive cash flow from day one. Well, once we got it painted, got the carpets in, built that wall in the hallway, put that, kind of a kitchen, we'll call it a kitchen in, and we were profitable from day one. Okay, so we ran out each side, and we had positive cash flow, about $150 a month, if I remember right, coming in. So we could have just held on to it, but I saw the the dollar signs. I go, I want my 40 grand now. I want to sell it and get out of it. But there's some opportunities that are going to be there for the millennial generation that are coming. Now look I wouldn't be buying a property right now, right here. They're just too expensive. They're not affordable. They're going to come down. They're going to revert back to the mean. But if we get another 20% off from here, and a lot of people used to think I was crazy when I said 50% off, but now that we're already down about 10% off. Goldman Sachs says we're going to drop another 20%. Goldman Sachs, they're reputable. People listen to them, so that'd bring it down to about 30%. And once we get down to about 30%, it may be time to start looking for the right opportunity for you in your area. Now, a lot of people, they buy houses out of the area because they live in a rich area, and they buy them in the state they don't even live in the state. Me, I like to drive by that property that I invest in. I don't want to buy out of the area. That's just me. It works for a lot of people. Maybe you're buying out of the area. Maybe you own houses all around the United States, and that works for you. But for me, I want to drive by. I want to shout out my renter. I want to say, hey, mow my lawn. The lawn's getting too long. Mow that thing. I want to let them know that I'm watching. That way I have good tenants. I used to have a lot of tenants. I used to manage properties. You know how I got my tenants? My old economics teacher taught me this, and I've mentioned it on the program before. I didn't take rental application. I took them, but I didn't know what to do with one. I didn't know how to run a credit check. I didn't know any of that. What I did know how to do is ask for three referrals, 3 people that would vouch for them. And I actually called those people. I go, hey, do you know Billy Bob? And they go, yeah, I know Billy Bob. Well, Billy Bob wants to rent a house from me. Okay, so would you vouch for him? Oh, yeah, he's a great person. Well, what if he doesn't pay his rent? Would you pay it? Oh, hell no, I couldn't pay that guy. That guy, he doesn't pay his bills. And then they tell you the truth, right? So I called up the 3 people for the renter, and if I got good responses, I'd rent to them. Other secret. Okay, when you're showing them the property, walk out to their car with them as they're leaving. Walk out, continue the conversation. Take a peek at how they treat their car, because that's pretty much how they're going to treat your property. Their car's nice and neat, your property's going to be nice and neat. If their car needs paint, your property's going to need paint. They're not going to take care of it. Look at their car. That's how they're going to treat your property. I know I take the application. I make them think I'm running the credit score. I'm really not. But I am calling those 3 people as referrals and asking if they will vouch for them if they don't pay. And you'll be surprised. It eliminates a lot of headaches. I don't even know if that's legal to do. I really don't. I'm a real estate broker. Not sure if that's legal, but that's how I did it. And that kept me out of the tenant situation. I did have some bad tenants before that, and you see, that's how I learned that secret. So you can learn from my mistakes. But there's going to be opportunities in the real estate market. These prices are not going to stay up here forever. Goldman Sachs says we're going to drop another 20%. That brings us down to about 30%. I say we're going to get down to about 40 or 50%. And a lot of the millennials that are living at home with their parents, maybe they are ready to branch out, and maybe some of this can help them become an investor in real estate. But you don't even have to live there. You can still live at home if you want. But get out there and look for a property. My first property, I did it with no money. I had to borrow that. I found someone that had the money. You got to find someone that has the money if you don't have the money. But you can do the legwork. You can find the deal. You can do the research. You can get out there and look at properties. Think about what you can convert them into. Right now, I just showed a property the other day in San Jose that would be perfect to do that R2 zoning thing. It was zoned R2, but it was a house and it was big. You put an in-law quarters in the back, an ADU, auxiliary dwelling unit. You could have 2 units as a duplex right there. It's already zoned for a duplex. You could get some cash flow coming in. It's still a little high price though, so I'm not going to do that one. But this is things you can look at. There's opportunities that are going to be coming in the real estate market. This isn't all gloom and doom. Look at right now, people, it's a house of cards out there. It's getting ready to topple over. But when it topples over, the government's not going to like that. But it creates the opportunity. The opportunity comes for the new people that come in and see these low prices and go, wow, things are starting to cash flow. Wow, this is really cool. I could buy this house. Wow. Very interesting. Anyways, I just been rambling on here today. That's all I have for today. Anyways, if you like this stuff, give me the thumbs up. Get out there, everybody. Have a great Wednesday. Hit the subscribe button. I want to talk to you again real soon. Bye-bye now.